Have you ever imagined a world where Wall Street just never closes? Where you could trade stocks, bonds, even a piece of a skyscraper 24/7, just as easily as you send an email? Well, that's not science fiction anymore. It's the new reality being built as we speak. As the old world of traditional finance collides with the new world of blockchain, we are witnessing a total rethink of how we own and trade things. And believe me, it is happening a lot faster than you think. This image just nails it, doesn't it? That ancient pillar, that's traditional finance. It's stable, it's established, but let's be honest, it can be pretty rigid. And that crack of golden energy, that's blockchain, weaving its way through the old system. It's not there to tear it down, but to completely transform it from the inside out. This isn't a hostile takeover, it's a great convergence. So this all boils down to one massive question, the one we're going to unpack today. What really happens when the incredible capital and trust of Wall Street meets the transparent, programmable power of Ethereum's code? The answer, as you're about to see, is already unfolding around us. Okay, so to really get what's happening, we gotta ask the big question. Why Ethereum? I mean, out of all the blockchains out there, why has Wall Street picked this one as its platform of choice? It's not just because it was first, and it's not just brand recognition. It comes down to the very bones of the network. And this right here, this is why. Ethereum isn't just a cryptocurrency, it's a full-stack financial machine. You've got these different layers, each with a specific job. At the very bottom, you have the settlement layer, which is like the ultimate final record book for every transaction, super secure. And as you move up, you get to smart contracts and all the applications built on top. It's a complete toolkit for building a new financial system, which is why the big institutions see it as the perfect base chain to build on. I love this analogy. Someone called Ethereum Wall Street's digital oil, and it's just perfect. You know how oil powers our entire industrial world? Well, Ether, the network's native token, is the fuel for this new digital economy. Every single transaction, every contract that runs, it all needs a little bit of that digital oil to make it go. Now, this whole movement didn't just happen overnight. There were a couple of huge catalysts that basically threw gasoline on the fire. First, in 2025, the approval of spot Ethereum ETFs. This was massive. It created a super easy, regulated on-ramp for huge institutional money. Then, in 2026, the proposed Clarity Act started to clear up the regulatory fog, giving these big firms the confidence they needed to really jump in. So if Ethereum is the new foundation, how do you actually connect the old world of finance to this new one? What's the bridge? Well, the answer is a fascinating concept called real-world asset tokenization, or RWAs for short. RWA tokenization is basically the magic of taking something real and tangible, like a building, a government bond, a bar of gold, and representing ownership of it as a digital token on a blockchain. Seriously, just think about it. Owning a tiny piece of the Empire State Building and being able to trade that piece instantly with anyone in the world on a Sunday night. That's the power we're talking about. And here's a look at how that actually works. On the left, you've got your physical stuff. It goes through what's called a tokenization engine, which is really just a mix of legal paperwork and smart code. And bam, out the other side comes a digital token on the blockchain. That token can then be traded globally, 24/7, and settle in minutes instead of days. And listen, this isn't some tiny niche experiment. The market for these tokenized assets has absolutely exploded. It blew past $300 billion in early 2026, and some folks are saying it could hit trillions by 2030. And here's the proof. Look who's playing in this sandbox. We are not talking about startups in a garage. We are talking about BlackRock, the biggest asset manager on the planet, tokenizing over $2.3 billion in US treasuries on Ethereum. This is a total game changer. You're seeing billions in real estate, gold, even private business loans moving onto the blockchain. This is Wall Street voting with its feet and its capital. It's happening now, and it's happening at scale. So what we're seeing here, this is the tipping point. This is no longer an experiment. Wall Street is going all in, systematically integrating with this new tech, and it's doing it through three main pillars. So how is Wall Street actually plugging in? Well, it all rests on these three pillars that are holding up the bridge. You need digital dollars, so you have stablecoins. You need a safe way for big money to get in, which is where ETFs come in. And finally, you need the two worlds to speak the same language, and that requires data connectivity. Let's break each one down real quick. First up, stablecoins. You can think of these as the dollars of the digital world. For Wall Street to really operate on-chain, it needs a stable currency, right?
With the market set to hit $1.5 trillion and giants like JP Morgan creating their own tokenized dollars, stablecoins are literally becoming the new plumbing for the entire financial system.
Pillar number 2 is all about the money, specifically how it gets in, and that's where ETFs come in. These regulated funds made it ridiculously easy for traditional investors to get exposure to Ethereum without having to deal with digital wallets or private keys. And get this, the demand was absolutely insane. Over $10 billion flowed into ETH ETFs in just the first year, and in 2025, the inflows were more than 5 times higher than Bitcoin's.
Okay, the last pillar is a bit techy, but it is so important. It's all about data. Think of a smart contract on Ethereum like a vending machine. It can automatically give you a soda if you put in $1, but it can't check the weather outside. Oracles are like a trusted weather report that you plug into the vending machine. They feed real-world data, like stock prices, into the blockchain so it can make smart decisions. And when you see a network that manages $6 trillion in assets, pick an Oracle, you know this stuff is critical.
Okay, so with all this integration, all this capital, all this infrastructure being built, it leads to the one question you're probably asking. What the heck does this mean for the price of Ethereum itself? Well, the same big players building on this thing have some pretty mind-blowing predictions. Goldman Sachs is seeing Ethereum somewhere between $5,000 and $10,000. Fundstrat's Tom Lee is even more bullish, throwing out a potential $20,000 price tag. And these aren't just crypto diehards. These are seasoned Wall Street analysts.
Let's just pause on that for a second. An average forecast in that range suggests a total market cap for Ethereum heading towards $2 trillion. We're not just talking about a price going up, we're talking about Ethereum potentially becoming a core global asset class, right up there with the biggest companies in the world. So where do we go from here? The train has definitely left the station, but the track ahead isn't perfectly smooth. We're now entering what some are calling the commercial age of Ethereum. The next few years are all about going deeper. We're looking at banks not just using the network, but using ETH itself as collateral. We're going to see tokenization expand into new areas like private equity and venture capital. And eventually, we could see a world where these DeFi protocols are the invisible, super efficient engine running in the background for Wall Street itself. But you know, like any massive construction project, that bridge connecting the old and new worlds, it's not finished yet. And there are some very real, very deep chasms that still need to be crossed. And there are some serious gaps they need to fill. First and foremost, regulation. Without clear rules from agencies like the SEC, the really big institutions will stay cautious. Then you've got the tech risk. Smart contract hacks are a constant threat. Fragmentation is another headache. Splitting assets across a bunch of different blockchains is just inefficient. And of course, you can't forget about the competition. Other blockchains like Solana are fighting for a piece of this multi-trillion-dollar pie. But if they can navigate these hurdles, what's on the other side is a total game changer. It's this idea of CDFI, a hybrid system that takes the best of both worlds. You get the capital and trust from Wall Street, and you combine it with the efficiency, transparency, and global access of Ethereum. It's a vision for a financial market that's truly global and always on.
So the takeaway here is that this isn't a what-if scenario. This new financial world is being built, brick by digital brick, today. The convergence is real. The question isn't if this bridge will be finished anymore, but rather what kind of incredible new world of finance will be waiting for us on the other side. And that is a story that's going to define the next decade.